is a scenario every breakout trader knows too well. You spot a perfect resistance trend line. The price punches right through it. Everything looks perfect, so you jump in, only for the market to immediately reverse and hit your stop loss. You didn't just lose money, you fell for a fake breakout. But what if I told you there's a single indicator already built into almost every charting platform for free that can filter out the vast majority of these traps? Today, we're breaking down the volume indicator, exactly how it works, and how to use it to confirm trendline breakouts with institutional-grade precision. Before we trade with it, we have to understand what it actually represents. Price tells us where the market is moving, but volume tells us how much power is behind that move. Simply put, volume is the total number of shares, contracts, or coins traded during a specific time frame. Think of it this way: price movement represents an agreement on value, but volume represents the intensity of that agreement. Retail traders like you and me don't have the capital to move major markets or sustain long-term trends. The moves that matter are driven by institutions, banks, hedge funds, and large asset managers. When these big players move, they leave giant footprints. Those footprints appear directly in your volume bars. So why do fake breakouts happen? A classic bull trap, or liquidity grab, often occurs when the price pokes just above a heavily watched trend line. This triggers the buy-stop orders of breakout traders and forces short sellers to buy back their positions to close them out. Smart money uses this sudden influx of retail buying liquidity to sell their own large positions at a premium. If a breakout happens on low or average volume, it tells you that institutions are not participating in the rally. They aren't chasing the price higher. Without their capital to sustain the move, the breakout collapses. To protect your capital, let's build a strict, systematic filter using trend lines and volume. Here is the exact three-step framework you should look for. Step 1. Establish the trend line. Your trend line must be clean and valid, meaning it connects at least 2, ideally 3 or more, distinct reaction points. The more times a level is tested, the more significant the eventual breakout will be. Step 2. Look for volume expansion. When the breakout candle occurs, look straight down. A valid, high-probability breakout requires a massive, above-average surge in volume. This is the Wyckoff principle of effort versus result. To break a heavy psychological trend line, the market requires massive effort. High volume proves institutional backing. Step 3. Wait for the close. Never enter a trade mid-candle. A massive volume spike on a candle that ends up closing as a long-wicked shooting star is a sign of aggressive selling pressure, a definitive fakeout. Always wait for the candle to close firmly outside the trend line. Now, as disciplined traders, we have to acknowledge that no indicator is 100% foolproof. Here are 2 critical nuances you need to keep in mind. Number 1, the volume climax. If a breakout occurs after an asset is already severely extended, a massive volume spike might actually be a buying exhaustion or a blow-off top, rather than a fresh breakout. Context matters. You want to see the volume spike right as the asset leaves a tight, consolidated range, not at the end of a long run. Number 2, the low volume retest. Sometimes a valid breakout happens on good, but not spectacular volume. Then, the price pulls back to the trend line on very low volume to test it as new support. If the volume dries up during the pullback, it shows a lack of selling pressure. This low volume retest can often provide an even safer, more controlled entry point. Trading breakouts without looking at volume is like driving with your eyes closed. Price action gives you the direction, but volume gives you the validation. By adding this single structural check to your systematic trading plan, you can significantly cut down on false signals and keep yourself on the right side of institutional money. Let me know in the comments below. Do you use a volume filter for your breakout strategies? Trade safely, stay disciplined, and I'll see you in the next video.